even if you don't have a passion for environmental sustainability, you don't have the passion for the environment, even if you don't care, I'm sure you care about money because that's really what drives all of this stuff. Ultimately, unfortunately, it's not necessarily just the passion for it. It's the financial benefits. And there is a lot of it. We're going to discuss a lot of that today.
Welcome everybody to today's episode. With climate change impacting our future, now is the time for the real estate industry to answer the call to invest responsibly. As climate change intensifies, how can we effectively balance sustainability and profits? On today's episode, you're going to learn which emerging trends show the greatest promise for long-term scalable impact, gain insights into overcoming common investor concerns to pave the way for the next generation, and really invest responsibly. The future of socially responsible investing is here, so tune in and shape it. Today, we are welcomed by none other than Ravi Gupta, COO and co-founder of Viking. Ravi, welcome.
Thank you, Nathan.
Awesome. So let's dive into today's topic. What is equal equity, first off, and then what kind of initially drew you to the topic? Because I know for Viking, you were really kind of the spokesperson, the powerhouse behind the planet part of our triple bottom line of people, planet, profit, and really kind of the powerhouse that's driving these sustainability initiatives.
Yes. Excellent. Well, thank you, Nathan, again. And I just want to congratulate you because we have hit a new mark in our podcasts. We initially had ones of listeners. Now we've got tens of listeners. So we're growing rapidly. I think we made 1,000% growth from about 6 months ago.
Well, they say that most podcasts don't make it past, I think it's the 5th episode. And if you make it to the 20th episode, you're in kind of the 1% of podcasters.
Okay, so we're in the 1%, man. We're on top of them. So congratulations there.
Likewise.
Yes, and great question. I think this is really important stuff. And even if you don't have a passion for environmental sustainability, you don't have the passion for the environment, even if you don't care, I'm sure you care about money because that's really what drives all of this stuff. Ultimately, unfortunately, it's not necessarily just the passion for it. It's the financial benefits, and there is a lot of it. So we're gonna discuss a lot of that today. So to answer your question, what is equal equity? What does it stand for? What does it mean? Well, really what it means is just balancing environmental sustainability with financial returns in real estate investing. And that's ultimately what we're trying to achieve, right? Because very few people will pay money for a project that's not going to give them some kind of financial return. Now, you do have some institutions, probably more European based, that are really looking at ESG initiatives and will give you less expensive capital for investing in a project that has a high degree of ESG component to it. But there is not a lot of capital out there. And the way we operate in the United States, if it doesn't make financial returns, we're not going to do it. So I'll just give you one, interesting example. When we started Viking Capital back in 2015, actually this project was one of, I think in 2016 is when we bought this one particular property called Ascent at Riverdale. I was all about this stuff. I mean, people that know me know that this is my passion. And I try to incorporate sustainability, environmental sustainability, and clean tech and everything. And I had an opportunity to be the first to put the first solar lighting project on any apartment complex, which if you ever hear someone saying, I'm the first to try this, then just run the opposite direction because you never want to be the first. And I learned this firsthand. We put this solar lighting project on, thought it was going to be awesome, thought we were going to save a ton of money. In fact, it just ended up not working. The batteries were blowing out. The contractor we hired thought he could do it. He really couldn't. It just was a mess, and it cost us $100,000 to install the system. We ended up making a ton of money on the project, so it was like really drops in the bucket at the end. But it was still a project where I certainly understood that, you can't, even if you have the passion for it, you can't just invest in everything. You really have to be conscientious and strategic about what you invest in, and that's what we'll talk about today.
Yeah. And it's actually you touch on kind of ESG, right? That environmental part, because a lot of people think about sustainability, think about, green energy and cutting out, carbon, but it's nice to have the kind of the social part of it too, where you really are better in the community, and kind of the government's part of it too, where you're kind of working with local governments to really build these communities. Because ultimately that's part of the value add strategy, is not just, hey, what's bottom line profits, but how are we actually adding value to the tenants, to the property management team, to the community as a whole.
Yes, absolutely.
So why is now the right time to kind of discuss eco-equity, given, the prevalence we've seen, in the early 90s when kind of the first kind of ESG initiatives got started? Why now in kind of 2023, moving into 2024, is a great time to really think about sustainability?
Yeah, well, personally, I think about it all the time. I think it's so important to consider this in every project you do, because it's just being good stewards of the environment. And as a physician as well, and I practice functional medicine, it's so important to maintain a healthy environment. Without a healthy environment, you cannot be healthy yourself. And you can just imagine being in like a toxic environment and be exposed to a bunch of things that are good for you, and you can't imagine yourself being maintaining your health. And it's true for things on a grander scale. It's true for communities. It's true for the planet. So that's what I think. Now, many of you or some of you may not share that sentiment. You might be thinking, well, hey, I do agree with some of the stuff, but it has to make financial sense. But that is the second reason, and maybe somebody else's primary reason for considering it now, is because there's a lot of money coming towards this type of stuff. You may have heard of the Inflation Reduction Act. There's hundreds of millions of dollars that are dedicated towards clean tech and clean energy type initiatives. And it's now's prime time to take advantage of some of those things. In fact, if you own an apartment complex and you are renovating units and changing out appliances, then you absolutely should look into this, because the incentives are there so that you may not even have to pay for the new electrical appliances you're installing. The rebates are so high, you might just get them, for free or some significantly reduced cost. So that's another reason to consider clean tech. The world needs it because of the climate issues, but then also there's a lot of financial incentive.
Yeah. And it's also about the efficiency of everything, right? Like if you're installing low flow toilets and LED lighting, you're helping out obviously the environment, but also helping out operationally your costs as well. So it is kind of a win-win. That's a lot of people, when they think about ESG or sustainability, it's very much an either or, right? You're either going to be sustainable or you're going to be profitable. I think those that are really succeeding in the area are finding that kind of middle ground where they're using the sustainability component and profiting simultaneously. That's ultimately the win-win that we're all looking for.
Yes.
I mean, I even grew up, for those of you who don't know, I grew up in Europe, and we were very religious about our recycling, right? The sustainability kind of part of it, where we would even separate out different colored glass. So there was like a container for brown glass and a container for green glass. And I think the States, America has a long way to come on that ESG kind of realm, which is great, right? There's a lot of opportunity there too. But it also kind of speaks to the kind of community aspect too, right? If just one person cycles, it's really not going to make that much of a difference, right? But having a full community that sees that broader vision, especially one that we can instill on site too for our tenants, I think is really powerful. So
yeah, that's a great example. And that's a great thing about investing in apartment complexes. You can create that community. I mean, there are like 200 to 400 families that are right there, and you create this community and you create this economic pressure, and there are going to be vendors out there that are going to agree to certain restrictions or environmental things that you want in place. Like it will happen. You have those economies of scale there. To your point about recycling, I'm very diligent about separating things out and making sure I'm putting the right things in the right buckets. But then I put my recycling out and I look at the next door neighbor, and he's got like literally bags of trash in the recycling, and it's not going to work. Like it's just not going to happen. It's just you have to get everyone on board. That's why I love this, the apartment investing and the eco-equity, clean tech type thought process, because you have that group to get, and you have enough people right there to get everyone on board on this type of stuff.
Yeah. We recently changed like our trash services in the cul-de-sac that I live in, where we used to have just trash and recycling. Now they went, changed to a new company, and they introduced like a compost trash or recycling trash and a normal trash, but they have all these rules about, using certain plastic bags that can't be included, kind of separating out. And I think they're like the cul-de-sac had like a little mini like nervous breakdown. Everybody was freaking out about these different rules, but ultimately it feels nice to be a part of something that's a little bit larger than yourself, right? To do something that's better for the environment, especially if you can do with those around you. I think that helps really build a community, right? To build something outside of just kind of your day-to-day, but really say, hey, I live in this community and I'm bettering the environment. I think that's also kind of a non-profit kind, almost tangible benefit to the ESG discussion that we're having.
Absolutely.
So can you describe kind of a standout example of a project that really kind of balanced strong returns with sustainability and really what made it successful?
Yeah, I can tell you one. It's a water savings project that we did in one of our apartment complexes in Atlanta, where we saw the water bill, and luckily the asset manager that we had at the time also was an asset manager for the seller years prior to that. Very, very interesting. Actually, not the seller. Sorry, it was for somebody else that owned that same apartment complex. So he had the all the data from years ago. And when we saw the water bill, we're like, wow, this is way high. What is going on here? And when we did our due diligence, we realized there was potentially a lot of savings in water costs. And when we bought the property, what we did was we just changed out all the faucets, the shower heads, the toilets to low flow, and it fixed a lot of leaks. There were a lot of leaks at that time, so that's why the water bill was so high. It was the leaks, and also there were high flow systems in place, and we changed all that. And we also put a water sense meter in the apartment complex, and what these water sense meters do is they track leakage. So you put it on the water main. If there's a sudden gush of water usage and that's sustained, it'll alert you, and you know that there's a leak in like at one particular building. So with those things, the ROI was 12 months, and then from that point on, we were saving a tremendous amount. So that was one of the best success stories for a environmentally sustainable, clean initiative with great ROI and made all the financial sense in the world.
Yep. Yeah, we do the same thing on the acquisitions front, where we're taking a look at all the utility bills and specifically water. And there's been a couple of deals just in this past week alone where I've reached out to the broker and asked if low flow toilets or low flow shower heads have been installed already. Because if they haven't and the water bill is high, there's tremendous opportunity to have some operational efficiency and really drive down those costs as well.
Yeah. And so there's water, there's also lighting. And this is a no-brainer. Switch all the common lighting to LED. The cost is relatively minimal, and the return on investment is like a few months. So there's a tremendous amount of savings there. There's also a lot of savings in solar now. Surprisingly, people would back away from it because of the upfront cost. But really, depending on the area in which you are investing, number one, each jurisdiction varies in terms of the favorability for solar installation. Like in Georgia, for example, unfortunately, the power companies really disincentivize apartments from using solar. But there are other areas like Indiana, where we have a property in South Bend, where there are incentives in place. So if you are in an area where there are incentives in place, you'll get a tax credit. You may get some other state incentives. Also, the power you generate will offset your operating expenses and will increase your NOI, so that if you divide that by the cap rate, you're actually saving a lot more you're going to gain a lot more when you sell the property than it costs to install that. And not only that, with the new Inflation Reduction Act coming out, you could actually, the credit that you achieve when you install solar, you can sell to someone else. So say you get, it's $1 million, for example, to install a solar system. You get a $300,000 credit. Traditionally, you can't take advantage of that because in an apartment complex, you automatically are taking losses up front because of the bonus depreciation. But with this in place, you can actually sell that to someone else. Say you sell it to someone else who needs it for $250,000. They make $50,000 right off the bat because they show profits. You make $250,000 right there because you're selling that credit. So you make that cash up front, and it makes more sense to install solar in that case. So really, the big wins here and the ones that are coming up, well, the ones that traditionally have been placed, water savings, LED savings, insulation also, especially in the, your main complex, the community areas. That's like a no-brainer. Then solar is one that's coming up. That's making a lot more sense now.
Yeah, I think tech also plays a huge role in that too, right?
Yeah.
There's we install smart thermostats that can track utilities, and especially in vacant units, right? If you have a vendor go in there who's too cold potentially and turns up the thermostat to 80 degrees Fahrenheit and walks out, that apartment traditionally in the past would stay at 80 degrees Fahrenheit until somebody went back in and changed the thermostat, right? But there are these smart technologies out there that can monitor that usage, and you can set certain standards. So at the end of every night, resets it back to 62, for example, and that will help on the energy savings as well.
Yeah.
So traditionally, there's been this kind of debate. ESG is great, but how do you actually measure its impact, right? How do you measure a social impact or a governance impact, right? So what key metrics are you using to really track the impact of eco equity practices?
Yeah, I mean that's a great question, because if you can't measure it, then it's very difficult to create goals around these initiatives and to project how the savings look in the future. And then you can't really show your investors the benefit of making these changes or the impact of making these changes have. So it's really important to measure those. Now, it's very easy to measure your utility bills, obviously in the common spaces. That's not that hard. You can measure water usage as well. But it gets increasingly complicated when you're trying to measure tenants' utilities, or maybe if you have multiple meters around, measuring that. So there are companies out there. One of them that's probably the biggest one is called Measurable, and it's spelled differently than it sounds. It's just a kind of a unique way to spell it. But if you Google Measurable, green tech, apartment complexes, it'll pop up. And that company itself will help you create systems so that you can measure some of your impact. So not only your energy expenditure, but some of the social, things that social programs that you implement, and then governance as well. ESG is environmental social governance. So it'll help you measure all of that, and it'll help. That program will also help you create a yearly report that you can show your investors that demonstrate how you're performing in those areas. Now, you can also do it yourself. Just transparently, we were looking at that, but the cost was higher than we wanted at the time. We'll wait for some time and acquire more complexes before we take the plunge and use Measurable. But we're creating our own, initiative. But we're measuring those things that I mentioned earlier, very simply, just utility usage, and then the social. Different social programs we're implementing, we're just keeping tabs on those at the different complexes. So you can create your own ESG report. But the key is measuring something so that you can really define it properly and then monitor the growth of it.
Yep. And that tenant satisfaction feedback, I think, is paramount too, right? Like,
yeah,
you can do everything as an ownership group, but how does it actually change the experience of that tenant on site too? So interact with them, talking with your property management team. They're the ones who will really kind of have a pulse on, what do the residents like, and even something as simple as a resident event once a month that can add to kind of the total experience of that resident.
Yeah.
So we've talked a lot about the benefits of ESG, how to measure it. What concerns tend to arise the most with investors that are kind of new to the space?
I think the concern is, as we discussed before, is the cost of it. Does the financial cost equal a proper return on investment? When you're an investor, I'll tell you a story. I was talking to one particular investor, and we started talking about, I can't remember exactly the topic, but I thought his question was, what kind of green initiatives are you putting into place? And I was really happy answering that question. I was like, well, this is the first investor that actually cared about this stuff. And I started telling him about different things. He's like, wait, what are you talking about? And I misunderstood. I mean, what he was asking was, what is the ROI on those investments, not what are you putting in place. Like he's like, I don't really necessarily care about those. I want to know what my money is doing. And that's ultimately what a lot of people are thinking. Like where is my money going? Is it earning what it should earn? So that is one of the biggest holdbacks, and it makes sense. You don't want to take an investor money, invest it in something, get a poor return and tell them, sorry, we didn't hit our metrics, but we put solar on the roof. They're not going to be too happy with that potentially. So as long as those align, and they're really starting to align. And in fact, there's so many ways to save a lot and make a lot of money in the space, then it really starts making sense. There's a website that you should all check out. I can't remember if I mentioned this in our discussions already, but Rewiring America. Did I mention that?
You mentioned at the beginning, but we can mention it again.
Okay. Yeah. Rewiring America. Check it out. It's rewiringamerica.org. There's a lot of information there about using some of this and when using some of these incentives and when all of them are going to roll out per state.
That's a great name too, to rewire things. That's awesome.
Yeah.
So, great. So we talked about kind of the benefits. We talked about how to implement it. What emerging trends kind of looking forward excite you the most about sustainability, ESG, specifically in the real estate investing space?
I think so. The trends that I see are the ones that we have mentioned, where you can save money on things so things are starting to make financial sense. Switching out appliances from gas to electric, switching out to LED, adding insulation, even things that you wouldn't necessarily think are really it's just eco-tech clean space, like changing your roof. You can actually get financing for those types of things at a low cost. And this is something else that I should mention. There's something called PACE financing. If you haven't heard of it, definitely look it up, Google it. You can, in every state, PACE financing varies, but it's low cost financing that you can use as part of your capital stack for many of these improvements. So if you're doing CapEx repairs or CapEx initiatives rather on a property, look up PACE financing for every property you acquire. Because if you're going to use that money, it makes all the sense in the world. It's much cheaper than investor money, and it improves your return. So I am excited about PACE financing becoming more widely available. Right now, it's only available in certain states, not all states, but that's something that's coming. As I mentioned, solar. I'm very excited about that. There's also technology coming out now where you can sell solar to individual tenants. So, it used to be that you would only put solar on a complex to take care of the common spaces because that's where you see returns. But now there's technology out where you can actually sell to the tenants and that money comes back to you. So you're selling power. You become a power generator. You can put a lot more solar on the roof and it makes a lot more sense. If you're interested in this, check out the podcast that we did with Owen Barrett of Raven Capital. I don't know when that's going to be published. I think it'll maybe published before this one, but check that one out because he talks about that technology.
Yeah, the technology is huge, right? Especially on the AI front of things too. There's new AI tech that's coming out that can help monitor specifically on-site operations. So there's some AI tech that can help kind of pinpoint preventative maintenance ahead of time. So they can tell you when the water heater is going to potentially go out, or kind of going back to that smart technology. So I think the more that AI gets integrated and is able to really, quote unquote, learn that property and what will benefit it the most from an ESG perspective, I think it is tremendously powerful. I think we've only seen the kind of the beginning phases of that AI tech. It's only going to increase from here on out too. Another kind of a trend that I'm excited about is the affordability trend, right? It hasn't necessarily been a new trend necessarily, but in the recent years, specifically, both Fannie Mae and Freddie Mac, who are large lenders in the space, have dedicated a large portion of their kind of funds for 2024 to the affordable space. So what we've done on the acquisition side of things is open up our deal pipeline to what are called LIHTC deals, and these are low income housing tax credit deals where the government, the state government, will give you a tax credit in turn for you offering your property to lower income households. So that's also kind of a nice social impact that we're also exploring on our end as well.
Yeah, and talking about social impact, there's other software applications using AI technology for streamlining financial operations of your apartment complexes. One of them that we've started implementing is called Kira. It's Qira. So that's something to look into if you are thinking about this. And what it does is helps you avoid bad debt by improving ways to improve cash flow for the tenants. It's basically like a pay later or pay early type service. It also helps with security deposit alternatives. It's very resident friendly. It's a way that residents can save time. And actually, there's a partnership, a profit partnership option there too. So if you use their software, you can profit and profit share off that. So these technologies are the S of ESG. They help the tenants, and then they also help your bottom line.
Awesome. Great. Ravi, what's one piece of advice you'd offer for kind of long-term eco-equity success?
I would say, if you are an investor and this is something that you're passionate about, ask your sponsor about it. Ask them what they're doing. Look into options for investing where there is an ESG component to that investment. Your money, creates shifts, and if you're investing in some of those spaces, it will. If enough people do it, it will shift the way we practice. If you're a sponsor, certainly look into some of the initiatives that we mentioned. I mean, even if you don't necessarily have a passion or focus on these types of initiatives, it will save you money, a tremendous amount of money at the end. And those are some of my final thoughts.
Awesome. Great.
Yeah.
Ravi, one last kind of question for you. In the interest of the holiday spirit, can you touch on the charity One Tree Planted and how Viking's connected to that charity?
Oh, it's like you read my mind. I was actually going to mention that right before we ended, but I was like, I don't know if it truly fits in, but you asked me the right question, Nathan. So I love this charity. It's called One Tree Planted. And for every $1 you donate, they will plant a tree. So we donate a lot to that charity. Every time we close on a property, we donate to the charity. We've planted, tens of thousands of trees thus far. You can focus on certain areas. So the area we're focusing on is Georgia. So there's an area of Georgia, because we invest a lot in Georgia. There's an area of Georgia that needs to be reforested. So we're going to plant trees in that area and help improve that up.
I love it.
Yeah.
Well, thanks, Ravi, and thanks everybody for joining us. And remember that as responsible investors, your decisions have the power to shape a sustainable and equitable future for all of us. So stay tuned for more discussions on finance, real estate, and responsible investing, and we'll catch you next time. Thanks, everybody.
Thanks, David.
If you like this podcast, please hit subscribe or a thumbs up, and we'll see you next time.